Hello folks, you're welcome back. This is Carrie's Trading Institute and this is the weekend commentary for the dollar and foreign currencies. If you haven't watched the last video I posted on prop firms, a shortcut to trading success, I would like you to quickly go watch that video on my YouTube channel. Just go to my YouTube channel, that's the video, watch the video, and you are going to see the instructions for participating in the 15k challenge account giveaway we will be running on Friday. So make sure you follow the instructions, make sure you register with the link in the description of this video, and make sure you join the Telegram community. And by Friday we are going to pick just 5 lucky winners who are going to be rewarded with a 15k prop account by Funded Next. Funded Next is one of the top 3 leading proprietary firms in the world. So I'm partnering with Funded Next to bring to you the best service in proprietary trading. You can go ahead and get an account as well with the link in the description of the video. If you use the coupon code, you will get 30% discount this August as well. So the first thing we usually do in our commentary every week is that we will need to analyze the economic calendar, forexfactory.com, and we are interested in identifying high and medium impact news events, which is symbolized by the red box here, which tells us that there's going to be a high impact. The orange box tells us that it's going to be a medium impact. The yellow box is signifying no impact at all or low impact in the marketplace. And in days when we only have the yellow boxes, that means we should reduce our expectations, especially in profit targets. Then we should also know that we're going to have a slow price delivery in such days, because that's how we know a low volatility trading day. So we are paying attention to the type of impact, the time the impact is going to happen, the day it's going to happen, and the asset is going to have an impact on. Okay, so when you see an orange box, for example, just look at the time, 3 p.m. GMT +1. This orange box tells us there's going to be a medium impact news event coming up on the dollar, all right, on Tuesday, 22nd of August 2023. So you go through all of the economic calendar. This tells you when to anticipate speed in the marketplace. While you are doing that, you are also taking note of days when there is going to be CPI, FOMC, and NFP. We do not want to be in the market when those news events are going to be released. We don't want to be in the marketplace, and the reason is simple: it's not worth your effort, it's not worth your time and energy. Right, while you can master something you can do again and again on a daily basis. All right, so once this is done, we just go to the dollar index and try to find out what the institutional order flow of the dollar is, especially on the higher time frame. You can start from the monthly or the weekly and the daily time frame. We're interested in knowing what the overall trend of the higher time frame is. It's called the institutional order flow. Okay, and why we are focusing on the dollar is because the dollar is the benchmark asset for all foreign currencies or dollar associated pairs. When the dollar is bullish, foreign currencies will automatically be bearish, and when the dollar is bearish, foreign currencies should go bullish because they have an inverse relationship with the dollar. Okay guys, pairs like USD CAD should go in the direction of the dollar. Pairs like USD CHF, because those are actually not foreign currencies, so they go in the direction of the dollar. Okay guys, so this is the weekly time frame of the dollar index, and what we see here was that previously that's been bearish pricing and bullish retracement into bearish order blocks. Bearish pricing took out sell side liquidity pool, traded into a discount level on the monthly time frame. That fair value gap we outline here was a discount level on the higher time frame. On the monthly time frame, price traded into it, and we see price currently traded above the buy side liquidity pool right here. Last week I think I outlined this level. I told you guys that we are looking to see the dollar trade above this level because there is a pool of buy side liquidity pool residing here. This is a bearish order block. The last buy candle that was traded through by 3 consecutive sell candles, 50% of that candle will be bearish mean threshold, bearish order block mean threshold. Okay guys, then this is a rejection block. We were looking to see the dollar trade into this level, the buy side liquidity pool here. The bearish order block here might resist price to start going down, or price might trade into the rejection block before we start to see the dollar go down. In line with the seasonal tendency for the dollar, we're anticipating a bearish seasonal price delivery on the dollar index and a bullish price delivery on foreign currencies. Okay, then we go down to the daily time frame, see what we have. So right now, this week, I'm anticipating to see a bearish dollar. Why am I anticipating to see a bearish dollar? Because the dollar has perfectly repriced into an internal range bearish order block, especially after taking out the buy side liquidity pool here. There is an institutional reference point immediately above it supporting what the dollar is doing now. So this might resist the dollar right here, and we start to see the dollar trading to internal range. You can see internal range fair value gap right here, and ultimately the equal lows here. And remember the bullish mitigation right here on the monthly time frame. Okay, that's where I'm looking to see the dollar trade into, at least towards the end of the year. We might see this price delivery. However, price will always do what it wants to do. When the narrative is changed, we change our narrative as well. So we simply go down to the daily time frame right now. What we are doing, remember, is called the top-down analysis. So this is the daily time frame. We have seen a bullish repricing on the dollar above that buy side liquidity pool. The objective has been met. Price has traded above the relative equal highs here and is finding resistance at the bearish order block of the weekly time frame. Also, this is in confluence with a bearish mitigation. You can see this is a bearish mitigation on the daily time frame, so it's been retested right here. We might start to see the dollar forming bearish market structure, lower lows, lower highs. Especially we want to see the dollar give us a shift of market structure around this level, especially on the 4-hour or daily time frame, before we start to sell the dollar and buy foreign currencies. Okay guys, so what are we seeing as well? I'm not ignorant of the fact that there is also a buy side liquidity pool here, and there is also a volume imbalance right here. All these are possible levels the dollar may want to still push to achieve those rejection blocks, the buy side liquidity pool above here, the volume imbalance. However, once we see a shift of structure on the 4-hour to the downside, it tells us that this bearish market structure is going to be sustained. Okay guys, so we go to the 4-hour time frame. And on the 4-hour, what we are looking to see between the Monday, Tuesdays, and Wednesdays is that we want to see the dollar form high of the week. You can see the dollar perfectly traded above the relative equal high. We want to see the dollar form high of the week and give us a shift of market structure in confluence with a smart money divergence to tell us that we're about to start going down on the dollar while we start buying foreign currencies. But overall, I want you to take note that August is not a very sweet month for trading. I've been saying this. The reason is because August, usually most banks go on holiday on August, so there's going to be a lot of whipsaws in the market. That's why you can see all throughout the previous week, the market has been within a range. The market has not really done so much. It has been kept within a range. But look at the whipsaws that's been happening on the dollar and the foreign currencies. It's crazy. So you need to reduce your expectation. You need to reduce what you are doing, your risks especially. You need to reduce risks. If you need to take 10, 15, 20 pips, take 20 pips and leave the markets to do what it wants to do until we fully resume in the next month, September, going into the end of the year. Okay guys, so let's quickly take a look at the GBPUSD, see if we can find something on GBPUSD as well. And on the GBPUSD, remember, if we're anticipating to have a bullish dollar, that means we should start to think of buying the GBPUSD and other foreign currencies. Okay, so you can see the price delivery on GBPUSD. Market structure has been sustained bullish, higher highs, higher lows, higher highs, higher lows. Price traded back into previous bullish mitigation block right here, and 50% of the previous candle wick right here. You can see that that's consequent encroachment. Price traded back into that level, the bullish mitigation here as well. and we are looking to see this guy continue. This is the draw on the liquidity. The buy side liquidity pool residing above this high is called the buy side liquidity pool. Those relatively call high here, and that volume imbalance right above it is the draw on liquidity on the pound dollar. Then on the daily time frame, you can see price traded down into the bullish order block we outlined in the previous week's commentary. Price has been finding support at that level. All right, price has been finding support at that bullish order block. Now look at what happened here. Price gave us a bullish expansion, created a bullish order block. Price returned into that bullish order block, and it's looking like it's ready to start going up. But we would like to patiently wait for the dollar to confirm that it wants to start going down, because until the dollar confirms, anything can happen. Reason is because the dollar is the benchmark asset, and all foreign currencies respond to the dollar. The dollar does not respond to them. They respond to the dollar. Because the dollar is the main driver of interest rate, the dollar is king in the market. So whatever the dollar does, that's what the foreign currencies usually would like to do. They dance to the dollar. Okay, so this is the 4-hour time frame. You can see previous week we've not had really any significant price delivery. It's been a whole lot of consolidation all through. Price has not really done anything significant. Okay, price opened on Monday, traded below the previous weekly low, the previous low, then gave us a shift of structure, returned back into bullish order block. Once the expansion happened, look at how price is retracing deeply. You can see that it's a seek and destroy pattern, taking out the highs, taking out the lows. Okay guys, so we'd like to patiently wait to see more confirmation, and we have enough reason to start buying GBPUSD. Look at the buy side liquidity pool here. Look at the liquidity void right here. Look at the relatively called high. Look at the fair value gaps here, or sell side imbalance, buy side inefficiency. Look at the relatively called highs. All those are buy side liquidity levels on GBPUSD. Guys, if you like the video, don't forget to click the like button, subscribe to this channel, and you can share this link to as many as you would like to learn from my channel and the things that I'm sharing. I'd like to know what you think in the comment section. You have a topic you would like me to talk about or teach, you can also drop it in the comment section. Don't forget, make sure you use the link in the description of the video so that you can qualify to be one of the lucky winners who will be giving 15k prop account, a challenge account with Funded Next. But for those of you who are capable, you can get an account with Funded Next. Use the coupon code in the description of the video and get 30% discount this month, while you get paid every time you make profit. You can take up to 80% with Funded Next. You can check their reviews on Trustpilot. You get to notice that Funded Next is truly a very good proprietary firm, and that you should be trading with them at this time of the year. Guys, until next time, I wish you good luck with trading. Stay safe.